Hello and welcome to Shop Planet for September 20th, 2022. Thank you so much for joining us. And just a reminder that if you're finding any value out of these Shop Planet episodes, please feel free to share, like, comment. We're coming up close to the end of the year. Well, I guess we've still got some time before the end of the year, but as we get closer to the end of the year, we will be reevaluating whether to continue these and make it a permanent fixture. But it was initially rolled out as a 1 year beta, and so far it's been successful. But I'd love to hear your thoughts on it. So as I'm recording this on Tuesday, on September 20th, we just had the Queen's funeral yesterday. Queen Elizabeth passed away. And it reminded me of this conversation I've had with multiple people about the estate tax. And it's a controversial topic, or people will talk about death taxes. Like, what are my death taxes? And there was really no such thing as a death tax. And I figured we'd spend a few minutes today talking about this death tax that doesn't really exist. So what there are things like an estate tax. There's a gift tax. There's an inheritance tax. There's even a generation skipping tax. So let's stick with the federal government for a second, all right? The estate tax, the federal government is going to earn somewhere around $250 billion for the federal government projected between 2016 and 2025. That's a lot of money. So it makes sense for us to learn a little bit about what are these sort of taxes. And that's just specifically the estate tax. Now, the federal government, the US government, it imposes this tax on wealth transfers through what's called a unified transfer tax system. What does that mean? It's three parts. Again, it's the estate tax, it's the gift tax, and the generation skipping tax. It does not include the inheritance tax. If you live in states like New Jersey, Pennsylvania, there is a separate inheritance tax, and we'll talk about that in a second as well, too. But little quick trivia, the highest estate tax that the government, that the country has ever known between 1941 and 1976, guess. 5%, 10%? No, it's 40% right now. It's actually 77%. That was the highest estate tax. It was right after the World War. And it's nowhere near that right now, but it is 40% at its highest rate. But here's the thing about estate taxes that you need to know, okay? Some quick hits for you to know. Currently, the rule is you're allowed to die with about $12.06 million each. So if you're a married couple, it's 12.06 plus 12.06. So it's a pretty large amount that you're allowed to die with. But the federal government, it's a unified system. And what happens is you treat that 12.06 million more like a debit card, which means if you give away 2 million during your lifetime, you're allowed to die with that much less. And if you give away more than 12.06 million, the government still takes that 40% tax. It's just called a gift tax instead. And when you use it up, then every dollar of the money that you die with is subject to an estate tax. So what does that mean? You can transfer a maximum of 12.06 million. It gets a little more complicated in a second, but just stick with me for a second. You can transfer a maximum of 12.06 million. You could either do it during your lifetime or you could do it at your death. Now, further complicating things is this current rule, it's scheduled to sunset in 2025. So come 2026, we have a new rule, which is supposed to relapse back to the old rule. And that's because the Tax Cuts and Jobs Act in 2017 didn't have enough votes to become permanent law. Congress could change things between now and then. But what you need to know is that we're scheduled to go back down to, let's just say, around 6 million. It's adjusted for inflation, so we'll have to see exactly what that number is. But it's going to be less. All right. So it's scheduled to go back to, I believe it's 5.5 million adjusted for inflation, probably get closer to 6.5 million, depending on what happens with inflation between now and then. So these are the estate tax and the gift taxes that we know about. There's a couple of sneaky things that you need to know about as well, which don't necessarily fall under the estate tax if you don't Google the right Google search terms, right? So obviously we talked about the estate and the gift tax. What you also need to know about is the inheritance tax, which could apply in different states. States like I said, New Jersey, if you leave things to a non-lineal descendant, has an inheritance tax. Pennsylvania has an inheritance tax. There are states like Connecticut that also have a state gift tax too. So know the rules of the states in which you live. States like Florida don't have an estate tax, so they don't have any state tax for that matter, which is great. So those are sort of things that you want to know from an inheritance tax perspective. The really sneaky ones that you want to know about are things like your IRAs and your 401ks, which are not technically an estate tax or an inheritance tax, but under the new rules with IRAs and 401ks, when a decedent passes away, unless there's a spouse or a certain limited number of exemptions of people who might benefit, who become the beneficiaries of those IRAs, most people are going to be required to take all the IRAs and the 401ks out of an IRA and 401k, pay all the taxes within a 10-year window. That was the Secure Act. So you want to be mindful of what asset is being inherited, whether it's an IRA, 401k, and what the potential tax liability is going to be. Do some tax bracket management there. And then another one to kind of keep in mind too, which again, a lot of people don't think about, is the capital gains step up. Now, this is not a tax per se, but if you own an asset, let's just say there's, grandmother owns a home from Brooklyn worth that she bought for $30,000 back in 1969. Bought it for $30 in 1969. And sorry, $30,000 in 1969. In 2022, it's worth $3 million. Grandmother owns that home still. She passes away owning that home. The kid's new cost basis now is $3 million. So they sell it for $3.1 million. They only have to pay the capital gains tax on that $100,000 difference. That's a huge difference, right? Because the alternative is she gifts it away during her lifetime. And what the beneficiaries get is called a transfer of cost basis. And basically what that means is their new cost basis on that property is $30,000. So they sell it for 3.1 million. They're going to pay the capital gains taxes on 3.1 million minus $30,000. So that's a pretty significant difference. And you want to know what your cost base is, because that's not an estate tax. It's not a death tax. It's not an inheritance tax, but it's a tax consequence of the planning that you do that's going to be realized at death and obviously at sale. So I know it sounds complicated. The most important thing is really just talk to somebody, right? Know what your intentions are about giving assets away, either during your lifetime or at your passing. Know what the tax consequences are going to be, and just make sure it's part of your overall plan. So again, this was a little more intense when it comes to the tax side of it too, but I thought it was relevant. And the reason why it was relevant with the Queen's passing in particular, why I thought of it is, this whole country was founded on the idea of you pull yourself up by the bootstraps. The mass transfer of wealth from one generation to another doesn't do any good for the country, doesn't do anything. You want every sort of generation to bring itself up with its own merits. But that being said, there are planning strategies that folks like me can put into place to minimize those estate tax and other tax consequences too. So timely, I hope, relevant, I hope, helpful, I hope as well too. Thank you again for tuning in. If you didn't get a chance to watch that cybersecurity webinar, we've got that link for you as well. Just drop us a note. We probably won't include it in the comments here because we've had it a couple of times now. You can find it in the past videos, but if you need it, just reach out to us too. Stay safe. Stay well. I hope you're enjoying the fall weather and the Christmas that's in the air. And I look forward to seeing you next week back on Shah Planet. Take care.